Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, May 29th, 2025. It's 11:39 a.m. Eastern Time, so I'm starting the video. We'll just keep this one limited to the equity markets now that Nvidia is out of the way. Nvidia stock is up today, but as I mentioned in the post I put out there earlier, it's up about 5%, which is a relatively muted post-earnings response for that stock. Some stocks tend to move quite a bit after earnings, and so again, it's up, but I already gave you that chart, that setup, and I'll maybe touch on it towards the end of this video. I want to just give a quick update on the equity markets, the top sectors in the S&P 500, and just expand upon my comments that I made earlier today with the short ideas on the equity markets and Nvidia as well. And really want to talk about risk reward and probabilities of trades, current trend, all that stuff. All right, so this is QQQ, and I'm just going to kind of recap here. I was waiting for some sell signals to, if we recap even longer, we shorted this run down from the top, gave that little bounce, shorted that leg down, started scaling out of shorts into longs, and by April 5th, 7th, whatever the day of lows, had posted in the comment section, no shorts, full long, game it up here to the bounce target zone right there, and then started scaling into the bounce target zone for back into long-term shorts. Now some of these are more active swing trades, and so from there up to but not above the 200, that was my plan stated then, and to not add anymore and not to have a full position until and unless we go back down there. So I scaled into a what I call a starter position. It was about a 3/4 position. Took a quarter off here, as I said I would that day, and then recently said I'm going to sit tight for the time being. We have both the active trade or typical swing trade short trade idea. That was the one just thrown out the other day based on the 60-minute charts. First target was already hit right there, a little bit deeper because we hit it in pre-market, had a reflexive bounce, and so that's kind of the 30-second or 1-minute overview of QQQ for the last few months here. Now, to get a little more granular, and again, speaking to both the typical swing trade that was laid out recently on the 60-minute chart, right about here, right off those highs there, game that bounce down, that was T1. I'll get to the 60-minute charts in a second. But we also had this trend line break here. That was a sell signal I was looking for, and that's why I wanted to do this video. I wanted to reiterate that QQQ, this is what I'm seeing on the daily charts right now, remains. We had a sell signal there on a break of those trend lines. That's a sell signal I was looking for. I said I wanted to see it on both QQQ and SPY, as well as some of the top sectors of the S&P 500, which I'll get to in a second. So we had a little snapback rally. You can see we have some negative divergence now forming for the first time in a while on the daily chart. In other words, the indicators are now making lower highs versus their previous peaks right here. And you also have a pending, but not yet confirmed, what I call high-level bearish PPO crossover. And so if we took the histogram right here, or this is the PPO. Let me add the histogram real quick. 1 second. Okay, just had to move things over down here. So here's the histogram, and what I like to look for in using this, stay away from using the crossovers or putting too much weighting during periods of choppiness like this. This is a choppy kind of sideways-ish market. You're going to get these whipsaws. What I like to see are these big green hills like that. And the bigger the better and more defined. And this is a inverted hill, I call it. And so what happens when the PPO crosses, this is a bullish cross there, they signal trend changes. So that was after that big correction there. Now we were covering that day, the morning of August 5th on the lows there in pre-market due to targets being hit and the 200-day moving averages being hit. So a lot of times we're able to get in front of these trend changes. And you can see right here, we flipped from green. We were green for a while right there. and then boom. But we also had previously shorted based on 60-minute charts. We had a breakdown sell signal on the 60. We're looking at a daily here. And on the weekly, we had the bearish engulfing candles that I highlighted there as topping sticks. Again, this is a daily chart. You can see it on the weekly. And again, it signaled a trend change. We had one counter trend bounce, which we gained in there as active traders back to the 200s, reloaded on shorts back there. That was my bounce target zone. It was a much tighter zone back then, again, given to you on the 60-minute charts. And then started, like I said, for the reasons back then, covering shorts and going to a long positioning, expecting an abatement in the trade rhetoric, which we got, and a rally. And then, again, as I mentioned, scaling back in here. So that's kind of the gist. But what I wanted to point out again is the, these trend indicators. So this is a bullish trend. You can see it was a pretty strong one of the bigger hills we've had in a while. And boom, as of today, and if we close red, or where we're at right now, we have the first bearish crossover in a while. So that is a trend change indicator. I don't put 100% weighting on it. Again, I take it in context with other things out there, like the divergences on the 60-minute chart, and Nvidia testing that deep seek gap. Nvidia being now, $3.3 trillion company, just a hair behind Microsoft, which is now the largest at $3.4 trillion. So Nvidia has a big mathematical weighting on the index, and that's it. So just wanted to point that out. On SPY, we also have a bearish PPO crossover in play. In fact, it triggered yesterday on SPY. We closed with the first red histogram. And again, that just means these lines have crossed. And as of now, as of today, if we close where we're at or lower, you can also have a second cross there. Once in a while, you get a whipsaw, but you can, you don't have to be an expert market technician to take a look at this and say, which way does it look like the PPO is going? You can usually see, anticipate a bullish cross before it comes, and anticipate a bearish cross before it comes as well, just looking at the histogram bars going down, or which is just simply these lines rolling over. And so that's it. So you have these trend change sell signals, if you will. Again, just one of many things. When you drill down to the intraday charts, let me move this chart down just a bit so you can see my time frames there. This is a SPY. I already gave you some charts this morning. We probably don't need to go over all of them. I give you NQ, and I give you the small caps and the NASDAQ 100, both the futures and the ETFs. And so that's it. So more recently, I was saying I wouldn't be surprised to see a marginal. I had these yellow lines drawn out to show it. If we got a new high anytime soon, it would be still a divergent high. That's the initial stop I gave you when we shorted. Right here was the entry on this trade, right off those highs there. We hit T1 down in pre-market. Remember, it's not going to show in this chart because I have the pre-market. They're no longer showing. These are regular session trades. Bounced as expected off the initial target, a little more than I thought we might get, but again, it's it's hard to gauge exactly how far bounce is going to go. And should it continue to play out, we still have this other potential trend line that may come into play, but that's still T2. And then I did give you a couple other targets. So here's my thoughts now. This trade either works or doesn't. That's the suggested stop. I gave you a stop on a move above 532. Ideally on a daily close, that would be my preference. But trade it as you want. And so I think if we get down to T2, obviously it's going to increase the odds if we go to T3 or 4, where that only makes sense. If we go higher, then T2 may not even be hit, at least not anytime soon. So if we get down to T2, and that's why I added these the other day, what's going to happen there is those trend indicators I just showed you flipping over, the PPO, that negative divergence on the daily, that will be further confirmed or solidified, if you will. We'll see more red histogram bars, so it minimizes the chance that it's going to be just a whipsaw on the daily chart when we get that bearish crossover there. And that's it. And therefore, we could see these deeper targets. Also, what you want to look at is if you zoom in here, I'm going to do this for you. I'm going to zoom in. I need to pull this up a little bit so I can grab down here, and I want to show you this where all the buyers have been since this bottom here. Okay, so this is where we were covering up shorts and going long, and very few were buying. You can see a lot of red bars on the volume at price histogram. That volume at price histogram, let me turn it up for you. It shows how much buying was done at each price level. So down here on the bottom, they're tuned down. These are your volume bars each day, or in this case, this is a 60-minute chart. So every volume bar represents that 60-minute trading period under each candle. And the volume at price shows this is where a lot of folks were still selling. But you can see right here, a big spike. And so there's a lot of people in. These are what I call JCL, Johnny Come Lately Longs. They didn't want to buy back here when we were buying and covering shorts. They were selling. They were more worried about the world coming to an end, thinking that Trump was going to maintain 150% tariffs on China and them on us, which is insane. Like I said, the two biggest economies in the world cannot for any period of time sustain those kind of, it would just, the brakes would come on and the global economy would crash. So it was about 100% certainty. That was just rhetoric and huffing and chest puffing from Trump and then China coming back. And so, of course, now we have the taco trade in play, which means, I posted yesterday is Trump always chickens out on anything related to the tariffs. So he's pretty much at this point lost all credibility, and people are now even, talking about, jumping on the taco trade. So next time there's a ramp up in tariff talks, buy that dip. But the thing is, by the time somebody realizes a pattern's working, or once the masses realize a pattern's working, the majority, that's usually when it stops working. So just a little warning there, be careful of that. Anywho, I just want to point out that this is where a lot of people have bought, as evidenced by volume of price histogram. The majority of people over the last couple months, in fact, you can see big bars here. And so it kind of meshes with, if we do get down to T2, you're going to have wiped out all those, and there's going to be a mountain of stops. It won't be at any single level, but it only stands to reason those that might have come in late chasing this rally and bought, knowing, hey, they had the FOMO thing, they just couldn't resist. Logically, their stops should be placed down along there. So that would help to accelerate the selling, get us down to T4. Now, if we do that, T4 is going to be down here at about 468 or so. Then here's how I analyze the charts. We're going to go down. It's going to bring us back down below, again, assuming, it's a big assumption, but assuming that final target's hit, it's going to put us back below the 200s. And that's the re-entry level for me on my long-term. Remember, I speak long-term accounts that I have, positioned for swinging the bigger trend down. And I still have dry powder to add and some to add back, some that I took out. So I have about a half position right now. And I told you I will not add. My plan is to add if and only if the 200s get taken out. So I just wanted to say that's something to keep in mind. So I may not be updating the daily chart on a daily basis, but remember that if this 60-minute chart happens to play out, and again, if you use your stop, depending on your entry price, your targets, whether you recycled or reversed off T1 and gained a bounce and then re-entered back, you might have a higher stop because you shorted back at a higher level, right? That's the initial stop that was based on an entry here when it was first thrown out in anticipation of the breakdown before it even happened, and then covering on and targeting T2. Again, stops are going to be dependent on one's unique entry price or prices, if they're scaling in their average cost on that trade, and what target or targets they're targeting. Some traders like to take partial profits when each target's hit and until the final target's hit. So there's many ways to trade. All right, so let me turn off these volume at price histogram bars, or at least turn them down. Okay, so let me just jump out quickly to the longer term chart on the weekly chart. The weekly, again, there's different trend indicators that I use on the weekly chart. One of those is, of many, is looking at where the PPO is. And I like to use a signal line, the 90 MA. It's the last of the two to cross. That's the white line. And you can see when you're below it, the trend is bearish. We've had one call it a bear market, call it a correction. Semantics, really, in my opinion, however you want to define it. It was certainly met that old school definition of a 20% drop off the highs back there, and that's at bear territory. The big Q4 2018 drop, we caught that top to bottom pretty much shorting that. And then COVID, and those were the only, and now. So in history, I'm sorry, we're going back to, I just said scroll back to 2016, you can go even farther. without any exceptions, these were the biggest drops in the market. And again, without any exceptions, that's what they had in common. The PPO moved below the zero line, and it recently crossed below, and it remains below right now. So this is, again, one of many trend indicators. It's not the be all end all. And of course, as I highlighted back then, another reason for covering up shorts and going long, we were oversold. We had oversold. Now, in a bear market, oversold, usually the first tag, you're followed up with additional tags. If it was just a bull market dip and correction, kind of like COVID, COVID, I call it Ursa interruptus. I made up term for a bear market that would have been and should have been a lot more, but the central banks and governments around the world just threw everything they had at it. And if you have enough money, which obviously if you print enough, there's an unlimited amount, and yeah, you can change the trajectory of the stock market, and that's most certainly what happened there. But again, it was so again, 36% drop from high to low in the S&P 500, but really just a correction, because if you blinked, you missed it. It only lasted 6 weeks. So, all right, so that's it, guys. I'm just showing you trend indicators, and I want to speak to that because I know you see the comments, and most people are just giving up. They don't want to short. They think the market's going to go to the moon, and maybe it does. Who knows? But again, I analyze charts, and this is what I do, and this is what the charts are. This is what I'm seeing right now. And like I said, everything, and I want to speak to that a little bit more, what I said earlier about the risk reward, especially on that Nvidia trade, and then probabilities. Before we do that, let me go to the sectors in the S&P 500. Let me jump back to my daily chart over here. And again, the key sectors, what I had stated is that I wanted to see QQQ and SPY below those trend lines, which they did, as well as the top sectors in the S&P 500. That's XLK, by far the largest, about a quarter weighting, 25% weighting, even though there's 11 sectors. This one makes up the bulk of the returns of the S&P 500 and over half of the NASDAQ 100. NASDAQ's just a very tech-heavy index. So there's a check mark there. And then financials too. Also break below the trend line, break down and back test, hit that first support level there at 49.53, bounced, and that's that. So there's the check mark there. XLV was, as I said, one of the better looking. Didn't have an uptrend line. This was a bottoming sector, and has one of the most constructive charts of the sectors in the S&P 500. So that's one that do not care to short, and so there was no sell signal to come because it was already, it didn't participate in the rally. It was going the other way. XLY is the consumer discretionary sector, which makes up about 10% of the S&P 500. And then finally XLC, the communication sector, and that's close to 10% as well. And so that's it. So check marks, check mark, checks marks. That still is, as of now, the high in the markets back in early February. And there was a lot of evidence and posts on the site, reasons to be short, including but not limited to the bearish engulfing candles that week, ending Friday, I think it was the second or third Friday in February, on all the indexes. And so far, that's the top, and that's it. And if we go up, if we go up a little bit more, I made a comment today when I got that first post out to you. This may be the last objective short entry, because if we go up much more, let me drill back down to the 60-minute chart. All right, let's go back there. What we have the potential, if we go up a lot more, to take out the divergences on the 60-minute chart. Anytime soon, they're not going to be taken out on the daily or the weeklies. But when I look at this, I see just a nice, very nice, these two lines here, bearish rising wedge pattern. One of my favorite patterns, just like I love bullish falling wedge patterns. They're just highly effective. They're easy to trade. And when you couple them with the proper divergences, overbought conditions, obviously sentiment's through the roof lately. You can get the, you can see people, in a nice way giving up. You got a new troll on the site that wants to make, comments like I'm calling for a crash, and like as if I've been short this thing from the bottom, forgetting that the track record of shorting and off the highs came in that bounce, covering shorts there, going long and milking about halfway up. My apologies for not milking 100% of this move. Obviously, I'm being facetious. So that's it. And I stuck with a trading plan. It's still the same trading plan. I had a much wider cone of certainty than the previous times. And that's it. So let's talk NVIDIA, and let's talk, this is what I wanted to talk about, the whole RR thing, risk reward ratio. So as I shared on the site today, this is, we shorted right here, the, what is it, whatever that was, February 20th or whatever, on the backfill, right after the backfill, the deep seep gap, and then I waited for that trend line break right there. And so that was, I think, a 37% drop. And then you have the current back test of the deep seep gap again. That's that same level. This is it right here. And if you guys don't remember, that was when there was an announcement. A Chinese company had come out with their AI model that runs much more efficient, and it was a lot cheaper and easier to create. And supposedly is, you know, could be the ultimately, if it's true. I haven't heard much about it, honestly. Maybe it's out there, but that could be a death blow to NVIDIA. Market really doesn't seem to be pricing that in at this moment. But either way, the point that I made today, it's a technically significant level. When you see a reaction like that, again, it was an easy short. And this is what I wanted to talk on again. When I talk about the risk reward on this trade, as well as the market, or especially on this one, being ranging from very good to phenomenal. Phenomenal is, again, everything should be framed according to your price targets. Your stop loss will be according to your price target. I've maintained this T4 level since back here. To recap, if you're new to the site, we shorted Nvidia somewhere up in here. These were long-term targets that I laid out back in last year in 2024. We hit and exceeded T1, and we didn't cover T1. We covered that morning right there on the August 5th lows. In fact, the entry price was a little better than what these candles show because I did that one in pre-market. We hit on my futures, NQ futures, all the indexes, including things like Nvidia key stocks, were hitting the 200 days and this primary bull market uptrend line, not to mention. So we didn't just cover it there and book profits. I also at that point said full long reversing. I called it a hard reversal, meaning covering all shorts, going to a full long position. And so see, this is bigger picture stuff, and this is why I do this in these videos. You know, we got a nice bounce and then waited for the next objective entry. We had one here. We had bearish engulfing candles, I think on the daily right there. There were several reasons to be short. And again, there were a lot of swing trades in and out, longs and shorts on this one. But then this was the next drop. This is where we started covering everything going long for the bounce. So here's NVIDIA's come full circle. And again, the deep seek gap is right now, was just backfilled today. And so that was the last time we shorted there. So this is how you can see when I look at this bigger picture. And this is what kind of keeps my faith, if you will. And for those of you, and I see the comments, that just can't understand why, you know, this market's threatening to break out to new all-time highs. And I recognize that. And I know that usually when you get that close, it's almost like gravity or two magnets. The market has a history, or these stocks, of punching through and making that new high. And then, as I often say, much more often than not, meaning most of the time, 80+%, stocks that break out to new highs with big negative divergence and overbought conditions have a much higher rate of failing. And so my longer term outlook, if we pop the highs, whether it's NVIDIA or QQQ and SPY, as long as it's marginal, you know, less than 10%, give or take, it's not going to change my longer term outlook. And now we may not get that because everyone thinks it's going to happen. Sometimes that's also what happens. The market's cruel that way. When everyone thinks one thing's going to happen, usually another happens, or the opposite thing, that is. So either way, this is that same uptrend line I gave you there. And again, it's you can call it a swing trade, you can call it a trend trade. You know, these are big moves. These are, you know, from that last high to all the way down was a drop of 43%. So, you know, even as a trend trader, you're going to want to take profits and or cover and reverse and game these swings. This is swing trading right here. Now, this is all trend trading. And if you look, if you shorted back here and you still may have a position, you're still profitable on NVIDIA. It peaked back then. This stock peaked, what is that, over not a year ago, but close to it, 6 months plus. And it also took out the primary uptrend line, and it did so with big negative divergence in place. PPO line divergences keep disappearing. I've mentioned that recently. I don't know what's going on there, but that's it. And so look, either pans out or not. But as I said today, if we get a break of that trend line, that'll be a sell signal. And then even better, let's go to the daily charts. Here's your uptrend line. So you can short here, that's objective. You can short there. And when I say and or, so you short at resistance, that's objective, and maybe a half position, and then you take it to a where there's a gap to be backfilled. There's today's earnings pop up right there. And if it takes that out, you can see this was resistance. This is that post-earning pop. So that means everybody that bought today, if we do break this trend line in this horizontal price level right here, that's going to be pretty powerful. That's probably where the stops are going to be for everyone that bought today on the earnings beat. And then boom, you can see my next support level, then the 200 simple moving average, 200 exponential, and then it should be lights out for Nvidia if those are taken out. Same thing with the stock market, or let's say that 115 level. You can see that's really nice support too. You can see my level. So that should be the lights out level. That's a given. But if we get down anywhere near those recent lows, including the stock market, it's not going to be a slow zigzag down to there. Once we start getting there, I think you'll have a strong gravitational pull. It'll be like a black hole, and people start freaking out. Because again, most people chase this rally on the upper half. We were buying it on the lower half. Most people bought in here. That means they're going to be underwater, right? And that's why you're going to see stops and, hey, what's going on? Why is the market going down? So I'm looking 5 steps ahead. Right now, we haven't even had the sell signal of the break of that trend line. And when I go down to the 60-minute chart, that's what I gave you today. That's it. It's just a nice, clean 60-minute rising wedge. This is the realm of the swing trader, one of my favorite time frames charting. You can see here we had a divergent high. You can go back as long as you want. We've had a lot of trades on this one, long and short. These must have been a short trade. 1, 2, 3, hit, reverse, divergent high, drop, divergent low, rally, divergent high, 1, 2, 3 price targets, divergent low, rally, new divergent high. That was the all-time high. Divergent low, rally, divergent high, drop, divergent low, rally. Another divergent low right here. Another reason for starting to cover shorts and go long a few weeks back. And that's it. So here we are now. And you have a nice clean up trend line. You had a little bit of just a couple little brief dips below it, but those are pre-earnings. Take everything. When you're following a stock, especially one like Nvidia that has a track record of making big moves after earnings, take any pre-earnings breakouts or breakdowns with a massive grain of salt, because they're likely to not stick. So in other words, the week leading up to earnings, yeah, just disregard any technical breakouts or anything. You got to wait for earnings, and then now earnings are out of the way, and so we'll see. The market will start to absorb what happened. As I always say, I put very little weighting in what happens the night of or even the day after. In the day after today you'll start to see, is this stock going to hold these gains? And you can see last time around, you can see the earnings right here. Let me turn off everything. I believe the last earnings report was right here. So you close that day, it would have reported that night, popped up night, just like right now, it popped up the next day. See, this is the E, but this one reports at night. So you close there. This is where we're at today. This is where you close last earnings report. Oh no, I'm sorry. Well, the previous one, you rallied up, made a new high, right? And then that was the high. It tried to test that high again and got smacked down with a bearish engulfing candle. That was highlighted back then as a short entry as well. And so we had, that, and then I gave it to you here again. That was a deep gap. So those were previously highlighted short entries. And just like now, nobody wanted to short it back then. Very few. There were maybe a couple comments, but usually I hear crickets when I'm shorting a stock or going long. Shorting at the highs or going long around the lows. Everybody wants to sell there. Nobody wants to buy. Everybody wants to buy here. Nobody wants to sell. So we'll see if it plays out that way again. I just want to show you again the track record. Closed there, popped up about the same amount the following day. Here's the next earnings report right here. We closed right here. There's your close on that green candle. Same thing. It popped up the next day. and by the end of the day they had faded to the post earnings pop, just like they did when they faded that one right afterwards. So we'll see. Doesn't guarantee we're going to fade this one, but if it does, it's a pattern, the same pattern that's been in place now for past 6 months or so. Buy the rumor or into earnings, and then sell the news or the post earnings rally. Okay, so I'm going to expand on this just a little more, and then I think I can wrap up. Maybe we'll take a quick peek at the VIX. So I said in that comment again about talking about the risk-reward ratio. And this is, again, something I've talked about many times on the site over the years. There's two criteria or variables that I look at when taking a trade. There's the probability of success, or my degree of confidence, and then the risk-reward ratio. For whatever reason, typically the trades that have the better RR, more favorable RR, and that means a risk-reward ratio is you're risking $1 to make X unit of profit. Typically you want at least a 2-to-1 RR. You'll risk $1 to make 2. A 5-to-1 RR is much better, obviously. If you're stopped out, you're going to lose $1 or 1 unit, and if you hit your price target, you're going to make 5 times that, right? So typically the trades that have the higher RRs, like this one, like the long term, if you're going for my T4 on Nvidia, that's a 70-something% drop off the highs. The RR is phenomenal on that. Again, especially if you use a nice, let's say 7-to-1 or better, 5-to-1 or better RR ratio. However, the probability might be low. I know there's very few people, if any, in the world that think NVIDIA can drop as much as I'm predicting it will drop over the next year or two. And it may not get there, right? So, the probability right now of that happening, I think it's a 70-something% drop off the high. Let me go back to it from the highs. T4 is the final target. 70, yeah, it's still 72, 74%, something like that. The probability may be low, especially right now, because this stock is threatening to break out to new highs, and it may go, and it's in a longer-term bullish uptrend. Although it's in a, it's the near-term trend is questionable. It's been flat now for over a year, so you say what you want about it, right? You can't argue that if you're looking at the trend over the last year or so, it's a sideways trend. It's not bullish or bearish. There's micro trends, shorter term trends within there. That was a bearish trend off the highs, and it's in a current bullish near-term uptrend, right? But intermediate term, the trend is indeterminable, neither bullish nor bearish. It's sideways, and longer term, it's clearly in a bull trend, right? That's pretty clear. This is your secular bull market, right? Okay, so that's when I talk about trends, I talk about short-term, long-term, because many times, and this is a great example. I've been long Nvidia as many times I've been short over the last year or so on that stock. I've remained longer-term bearish, but the swing trading opportunities, are usually geared largely off the 60-minute as well as the daily charts for the reasons I talked about, hitting the 200-day moving averages or pullbacks to the primary uptrend line, or breaks below the 200s, or breaks below these little. This is again a 60-minute chart. So right now that was the last divergent low. I'm going to imagine probably as few right now wanted to buy the stock back then as want to short it today, but that's what I see here. This is a divergent high, pretty clear and powerful negative divergence. Stock's up today. That's one thing about my analysis. I'll get in front of it. I hate hindsight analysis. I only give it out on the site if I miss something, and it's an educational example as to why the stock turned. I don't want to tell you, I don't want to point it out if I missed it, unless again, hey, I missed this one, here's why, there's something I didn't see or it wasn't on my radar. So that's it. So the stock is up now with 0 sell signals, 0 evidence of a trend reversal. In fact, it's threatening to break out the new highs if it can go up much more. But my thoughts on that. I think the highs will be limited, most likely, based on the current technical posture of the charts. So let me move on. And and then so finally, going back to that thing I was talking about with the, let me get a cleaner board here. a little more drawing space. So yeah, there's this thing where the probability of success, it will, I'll take a lower probability trade. In other words, this is a 110% counter trend trade. As I just said, this stock has been in an uptrend since the April lows, an unmistakable uptrend. There's not a person in the world that can sit and argue and tell you that over the last couple months this is a bearish trend. This is a clear uptrend. All right, there's just no mistake in that. It's not a subjective call. And there right now is zero evidence, not anything remotely close to a sell signal. So therefore, that makes the probability right now, for me to tell you that's close to 100% or very high, I'd be a fool. No, the probability is lower that this short here will pan out. However, the risk reward is very favorable, because if this stock, again, if you're just a swing trader and you take it, you can either, like I said, short term, you short that deep seek gap where we shorted last time right here, or when I say or, starter and then an add-on position there, and then you can take, the measured target of the wedge is the widest part, added to where it breaks down. So that'd be your pullback target right there. That would give you, if you shorted it today and it does play out, you're going to make about 11% or so on it. That's a conservative, relatively conservative short-term swing target. Little deeper, and again, just a swing trader, you might target a back test of that downtrend line right there. That would be giving it about, let me measure it out, let me extend the trend line. Okay, and now measure that, be roughly, again, depending if one hit, about 17%, right? So if you're going to take that trade and you're looking for, 10 to 17%, you can give yourself a 5%, something like that stop loss on it, and that would be somewhere up about there at about 151, 152, something like that, right? However, if you're taking this one and you're going for, from where we're at today, right now, you're going for T4, let's just say 71%. Well, you can give yourself easily, let's say a 20, we can go with a 20, we'll say maybe a 23% stop loss, and you're talking a nice 3-to-1 RR, something like that right there. And that would allow for that marginal new high, and should be just out of range of where it will probably reverse. So I'm at 176.45 right there. Again, most people don't play the long game like that, or believe it can go that far. And if you don't, well, my next stop is T2, and guess what? It's probably going to have a reaction if we get to T2, whether we go to a new high or not. So if we go to a new high, these will still remain my targets. If we go up to new highs and it's much above that 200-ish level, and I see these divergences no longer in place on the weekly and daily charts, it's going to be a hard case to make that these targets are still going to be hit, right? As of now, I have as much confidence as I did when I first threw those targets out here. It's just, this is how things are playing out. This is a stock, and if you look at it on the monthly chart, one of the most beloved out there, but it's one it's had these big divergences building for a long time, and it took out this cyclical bull market uptrend line, had a little bounce after the breakdown, that's it. And so sometimes you break down from an uptrend line or a wedge and you never look back. That from high to low, that was an 86% drop. That one was a 90% drop. This one was a 57% drop off that divergent high. This one was 69. And then sometimes you break down and you have a little kickback rally first, and then you go down to where you're going. So these are just longer term on the monthly chart, longer term potential targets, but these are the official targets here on the weekly. That's what I'm looking for right now. And so again, back to what I was saying with the probabilities, because of the near term uptrend and zero sell signals yet. The probability, I would certainly say right now, is lower, but as I just outlined, the risk-reward ratio is very high. Again, and you don't have to use that 20-something% stop. You could use take a shot here because this is where it could stop. You could put a smaller, like a 8-10% stop. I wouldn't go much lower than that if you're going for those longer term targets. Even just that next T2 level on the weekly chart, I would give it at least a 10-15% stop, and you would still have a very nice R. However, once we break, if and when we break this trend line here, let me get back to that. Right, the probabilities change in real time and trading the market. So at that point, if we get a sell signal there, a break of the trend line, that's going to tick the probabilities up a little bit. If we break this support level here, 128.77-ish, and then the 200s below, now your probabilities increasing quite a bit there. That's how it works. And so at that point, I may be adding on to a position. I'd also like to see that bearish PPO crossover. Let's take a look at that, see how that's worked on the video. Here's a big green hill right here. There's a bearish PPO crossover. You could have shorted it. Again, I don't use those standalone. There was a little whipsaw here. It went to a marginal new high. You wouldn't have been stopped out if you were, trading it longer term. And so you had a little whipsaw. Then the indicators flipped back bearish again. The PPO crossed over. And again, this was a topping stock. It was going back and forth here, and that's when you tend to get these whipsaws. That's why I like these big green hills. That's usually when you get, and that was, remember, that marked the top right there, right after that. There was a nice uptrend here, big green hill, nice uptrend. Boom, there was your bearish crossover. There was a bearish engulfing candlestick there and a divergent high, and that was a high double-digit drop. Flipped to bullish right there. You had a nice rally. Okay, so you get the point. So this is something else I'll be watching for, and that will be if and when we get the bearish PPO crossover there, high level, it's going to tick those odds up, of especially if it happens soon. So that's about it. VIX is just an inverse play on the stock market. Like I always say, it's my targets remain what they were when we first entered the long right here in anticipation of the breakout. Then a buy signal came afterwards. Kind of like Nvidia, we bought the VIX at support, and with positive divergence on the 60-minute chart. Then we had a follow-up buy signal there. We had our first target. We pulled back. We hit my bounced pullback target zone to re-enter, cover that short, go back long. Went up to T2. I had, just like with the stock market, my cone of uncertainty, I'll call it, or cone of certainty, however you want to say it, was much wider. And as recently mentioned, the VIX had this nice uptrend line. It's been holding that uptrend line. We're in that scale-in zone, but we need to, like the stock market, we need to exit that scale back in zone. We need to see the stock market drop below the 200s, QQQ and SPY, and if we do, the VIX should start to accelerate and then run up and hit that third target. I may have to make an adjustment because that target was laid out so long ago. Over time, these VIX tracking ETFs and ETNs, they drift, if you will, because they have expenses and fees to continue to roll the futures. So what I'll always do is after a while, I may need to adjust the final target based on the VIX, spot VIX chart, depending on how that looks at the time. And that's what this is right here. My weekly right there, and that's it. So we'd probably get up at that point, probably get up to about right here in the VIX if my third target on VIXY is hit. And I can tell you right now, that's not going to be hit anytime soon unless the market rolls over. Whether it puts in a marginal new high first and then drops, or whether it's stalling out here, we start to go down, but we're going to have to break the 200s to get some traction going on the VIX and on the stock market to the downside. All right, let me wrap it up here and get the video out to you. That's it, guys. I don't know. There's not much more else to add. Markets are flattish today. We did, gave up some of the gains in QQQ. Nothing big. It's still green right now. I suspect we'll close red today. Is what it looks like to me based on the charts. But we'll see. We're below that trend line there, and 60-minute chart. Still still some work to do. And we need to take out this level here. That's the first support level, then the trend line. T1 right there, 502.88, 502.90, whatever. And then T2 will be a backfill of that gap. Remember, the market doesn't like it. Sometimes leaves unfulfilled gaps, but quite often it doesn't like to do that. It likes to go in and backfill gaps, even if it's going higher. So T2 is set a little bit above the bottom of the gap there, in case we do go into there. All right, let me wrap it up here. We'll see what happens today and or tomorrow. I'll get the video out to you guys. And of course, if you have any questions, just follow up under this post. I think I caught up to everything earlier today, previous questions and comments. But feel free to bump me here and I'll get back to you. I'll be at my desk for most of today. This has been Randy Finney with Right Side of the Chart. Have a good one.